Hello, Assalamu alaikum students. This is your teacher Azka, and today we are going to solve the topical MCQs for the disposal asset because now we are going to discuss the most popular and most repeated one, most repeated disposal accounts, most repeated person related to disposal accounts. Okay, so first of all, we have first information. As you can see that we have the following information related to the disposal of non-current assets. So first of all, we have the profit on disposal. So what does it mean? That its sales proceed is higher than its net book value. If the sale proceed is higher than its net book value, so it means that we will get the profit on disposal. But unfortunately, if the sale proceed is lower than the net book value, so what does it mean? It means that we would have the loss on disposal. So cost of non-current assets sold is equal to 40,000, 14,400, and sale proceed is $6,800. And we have to find out the accumulated depreciation on the non-current assets. Okay, so we have the sale proceed, we have the cost of non-current assets, we have profit on disposal. So if we try to find out the accumulated depreciation, so first of all, we have to add 5,200 with the 14,400, as we can see. So it is giving us the total amount, which is 19,600. So if we deduct the sale proceed in it, so whatever the difference we will get, it would obviously the amount for the accumulated depreciation. So 14,400 plus 5,200. So we have the total amount, which is 19,600. And now we are going to deduct the sale proceed in it. So whatever the amount in the last we would get, it would be our accumulated depreciation. So 19,600 minus $6,800, which was the sale proceed of this asset. So now we have a 12,800 accumulated depreciation. So the D option is the right option. Okay, and in question number second, we have the information that a business purchased a motor vehicle on 1st January 2012 for $24,000. And its estimated useful life of the motor vehicle was 4 years, and the estimated residual value at the end of the 4 years was $8,000. The business depreciates motor vehicle at 25% per annum using the reducing balance method. Don't depreciation is charged in the year of disposal. The motor vehicle was sold on 31st July 2015 for $12,000. What was the profit on sale of the motor vehicle? So this is very easy because we know that what type of formula we are going to use. Basically, first of all, we have to try to find out the net book value, and after that, we will deduct the sale proceed from the net book value. So if we will get the negative answer, so it means that this is the loss in disposal. And when we get the positive answer, subtracting the net book value from the sale proceed or sale proceed from the net book value, so it means that we get the profit on disposal. Okay, so first of all, the cost of the asset was $24,000. Okay, so as you can see that we have purchased this asset in 2012. In 2012, okay, and we are basically selling this asset in 31st July to 2015. But because in this particular question, examiner has asked us um, to use the yearly depreciation, not the monthly. So that is why we would anticipate that for this asset, our year end would be on 1st January. But if you see in real situation, so the financial year ends on 31st July 2015. Okay, so in 2012, first of all, we have to find out its depreciation for 2012. So because we don't have any net book value at the start of the year, so that is why we are using the rate, we are imposing a rate on the cost. So $24,000 is the cost of the vehicle, multiplied 25%. So we have the depreciation for 2012, which is $6,000. And in 2013, we would apply the depreciation rate on the net book value. So what was the net book value at the end of the year? So we have $18,000. So $18,000 multiplied 25%. So we have the accumulated depreciation. In 2013, it is $4,500. So now we are going to find out its depreciation again in 2014. So now we have the net book value, which is 13,500. So 13,500 multiplied 25%. So you have the depreciation for this year, which is 3,375. So now, at the end of this year, we have the book value, which is 10,125. Okay. So the net book value is 10,125, but if you see the sale proceed is 12,000. So it is higher than the net book value. So it means that we got the profit on disposal, which is 18,075. So A option is the right option. Okay. So in the next question, a business purchased a new machine on 1st January 2020 for $15,000, paying $10,000 by check. The balance was settled by a part exchange of an old machine, and this old machine had cost $12,000. On 1st January 2018 had been expected to last for 6 years with a residual value of $2,400. The business uses a straight line method of depreciation, so it was a loss on the disposal of the old machine. So basically, we have to find out the depreciation for the old machine, not for the new one. Okay. So what was the cost of the old machine? This was $12,000. Okay. And first of all, we have to find out its depreciation. So because since we are using the straight line method, so we have the formula for it, the cost minus residual value divided by useful life. So as we can see that we have purchased this machinery in 2018. Okay, so from 2018 to 2019, so this is 1 year depreciation, and from 2019 to 2020 to 2020, so it is 2 years depreciation, because we have sold this machinery on 1st January 2020. So it means that we have to multiply the depreciation by 2. So its yearly depreciation is $1,600. And since we are finding the depreciation for 2 years, so that is why we are multiplying it by the 2. So we get $3,200 as a depreciation of the 3 years. Okay, so what is the book value now? So 12,000 minus 3,200. So we have the book value, which is $8,800. So since its sale proceed was, as you can see, that we purchased a new machinery for $15,000, and from $15,000 we have paid $10,000 to the person, and it means that this machinery's sale proceed was $5,000. So trade in exchange value of machine sold $15,000 was the value of new asset, and we have paid $10,000 by the check, so it means the remaining amount we part exchange. So this is $5,000. So this is a sale proceed. So it means that we have gotten the loss on disposal, which is $3,800. The C option is the right option. Okay, so the next question is, a business sold a non-current asset. It had been purchased for $1,500 and had an estimated useful life 10 years with no residual value. It was depreciated using the straight line method. It was sold after 6 years. Disposal cost was 100,000, 1,000. And there was a profit on disposal, which is $3,000. So what was the sale price? Okay, so this is the complicated one, but not that complicated. So first of all, we have to write okay. So what was its cost? So its cost is 15,000. Cost is $15,000. Okay. And its depreciation would be, because since we are using the SLM, so 15,000 divided by 10 years. Okay. So as you can see, that business sold and non-current has been, it has been purchased for $15,000, and its estimated useful life is 10 years. Okay, but it doesn't have any residual value, and we sold it after 6 years. So that is why it means that we have to find out the depreciation for the 6 years. So 15,000 divided by 10 divided by 10. So your yearly depreciation would be $1,500. But because we are trying to find out the depreciation for 6 years, so we have to multiply it by the 6 years. 1,500 multiply 6. So we have its total 6 year depreciation, which is $9,000. Okay, so it means that its book value is $6,000. Okay, and its profit on disposal was 3,000. So it means that its net sale proceed was equal to 6,000, which is the net book value, and the profit, which is $3,000. So its net sale proceed is equal to $9,000. And because we are trying to find out its sale price. So disposal costs were $1,000, and there was a profit on disposal, which is $3,000. So we are trying to find out its sale price. So net sale proceed was 6,000 plus 3,000. Its net book value and its profit on disposal. So it would give us $9,000, and we have to add its disposal cost, which is $1,000. So altogether, its sales proceed in gross is equal to $10,000. So C is the right option. Okay. So the next question is question number 17, that a business had a financial year end on 31st December 2020. Okay. On 1st September 2020, it had sold old motor vehicle and purchased a replacement. So how were these transactions recorded in the provision for depreciation account on 1st September 2020? So our year is ending on 31st September, 31st December 2020, and we have to identify that how can we record this transaction in the provision for depreciation account on 1st September 2020. Okay. So the first option is that the transfer of the disposal account was recorded into on the debit side. So yes, we have to transfer the disposal account on the debit side because we know that in the provision account, whenever your provision is increasing, so we will record it on the credit side. But when you maybe sold one of the asset, so it means that we have to remove the depreciation from the provision account. So that is why we have to record a disposal on the debit side. So whenever provision is decreasing, we are recording the disposal of the depreciation for the disposal asset on the debit side. So hey, as you can see that this is here the A option is not correct as per this statement. Depreciation on the new vehicle was recorded on the credit side. So it means that D part is the right option. Okay. So in the next question, a business has a year end on 31st December. It purchased a non-current asset on 1st January. The asset was depreciated using the reducing balance method at 20% per annum. It was sold for $40,000 on 1st January 2020, but was a loss in disposal. So I am skipping this question because we have been doing this question. I think we did 2 or 3 same question like this. So that is why I'm leaving it. So the next question is a business sold one of its non-current assets. The following information relates to this asset. So we have the purchase price, depreciation date of sale, and we have the sale price. So what was the effect of this transaction on the net assets in the year of sale? Okay, so because the purchase price was $50,000 and the depreciation which is $20,000, so it means that its net book value is equal to 30,000. Okay, and because its sale price is $60,000, so it means that you have gotten $30,000 extra as the profit on disposal. So it means that your net assets would be increased by $30,000. Okay. So business purchase a non-current asset for $500,000 with an expected life of 20 years. And it is expected to sold in $1,000. It was depreciated using the straight line method. Non-current assets are sold after 10 years for $120,000 with selling cost of 10,000. What was the loss on disposal? So again, this is again same question, so I'm leaving it again. Okay, so business depreciates machinery at 10% parallel using the straight line method on month by month basis. The business financial year ended on 30th June. Machinery which had cost of $6,600 on 1st April 2020 was sold on 13 November 2021. The profit on disposed sale was $350. So what was the sale proceeds? Okay. So yes, this is kind of different question. Okay. So as you can see that this machinery we purchased on 1st April 2020 and our year. A business has a financial year ends on 31st December. It purchased a vehicle on 1st January 2019 for 30,000. Business depreciates rate on 20% per annum using reducing balance method. Depreciation charged on a month by month basis. Vehicle was sold on 30th September 2020. Profit on disposal was 3,000. However, the inventories had been made to record a depreciation for 2021, but was the effect of not recording the depreciation of 2021 on profit on disposal. Okay. So, first of all, what was its cost of the vehicle, of the non-current asset? Okay, so the cost on 1st January, which is $30,000. And its depreciation for 2019 so 30,000, because we are using, I think, the reducing balance method. Okay, so 30,000 multiply 20%. So you would get 60,000, 6,000 for it, because we are charging the depreciation for whole year, because we sold this asset on 30th September. So from 1st January to 2019 to 31st December 2020. So this is whole year's appreciation. Okay, so after that, the depreciation for 2020, because the net book value is $24,000 now. So net book value is $24,000 multiply 20%. So it would give us the net book, the depreciation, which is $4,800. So we have the net book value, which is 19,200. Again, we are charging the depreciation for 2021, but as you can see that we sold out at this asset on 30th September. So it means that this is only 9 months depreciation, because your years is starting on 1st January. So January to September, it means that it is total in 9 months. So that is why we, in 2021, we have to find out a depreciation for only 9 months. So 19,200 multiply 20%. Multiply by 9/12. So you would get the depreciation, which is 2,880. So the depreciation is 2,880. So because you haven't recorded depreciation in 2021, start. Okay, so this is a depreciation which is 2,880, and you haven't recorded these expenses. So what does it mean? Because you are not recorded in 2021, this is when these expenses were understated. Okay, this was understated. Your expenses was understated, and that is why your profit on disposal would be overstated by 2,880. So your profit would be overstated. A is the right option. Okay, so the next person. I've read about a machine on 1st December 2019. It appreciates at the rate of 10% per annum using the straight line method. He sold his machine on 1st December 2021 for $4,000. The profit on disposal was $200. So how much had the machine cost in 1st December 2019? Okay, so we have to find out its cost. So again, this is very easy. If we want to try, if I just try to find out its cost, so we can use a formula, which is profit on disposal. Is equal to book value of asset minus sale value, sales proceed. Okay, so we have the sale proceed, which is 4,000. And the book value of asset is equal to cost of machine minus AD. And we have also the profit, which is $200. Okay, so we are adding 4,000 as it is minus cost. So we are assuming that our cost of a machine would be X and minus accumulated depreciation. So whatever the cost is, we are applying 10% on the cost. And we also have to multiply it by the 2 because we have to charge the depreciation for 2 years. We purchased a machine in 2019 and we sold the machine in 2021. So 2019 to 2020. So this is 1 year's depreciation. And 2020 to 2021. So this is 2 years depreciation. Okay, so that is why we have to write 2 multiply 2 here is equal to $200. Okay, so 4,000 as it is minus because we don't know that what is the value of cost of machine. So we know that X is always equal to 1. So 1 multiplied 10% is equal to 0.10. If we convert it in the decimal, 10% divided by 100 is 0.1. 0.1 basically multiply 2 is equal to 200. So first of all, we have to multiply 0.10 with the 2. So 0.101 multiply 2. So we have 0.2. Okay. And because minus X is equal to 1 again. So 1 minus 0.2 is equal to 0.8. So we have the book value of the asset, which is 0.8. X. X is the cost of the machine. Is equal to 200 minus 4,000. Because we want to find out the X value. So that is why we are making it subject here. This is the cost of machines. So because we are making it subject, So this is the plus here, so it would be the negative here. The sign would be changed. So 4,000 minus 200 divided by 0.8, because it is multiplying here, so it would be divided on this side. So 3,800 divided by 0.8. Okay, so 3,800 divided by 0.8. So the cost of the machine would be 4,750. Okay. So B is the right option. Okay, so we have the next question.